Good evening. This is the video newsletter for buysellshort.net for Tuesday, September 21st. Fed day today. They came out. Really not a surprise. Everything was left pretty much the same as before, except we did have an additional note that the Fed is ready to kick into another quantitative easing cycle here. The initial reaction from the market was downside. We saw the market Dow drop 30 points. The first move is always the wrong move, and so we saw a reversal back to the upside. We're up pretty nicely over the last month, and you had some profit taking. The volume wasn't really that great, but what we saw, especially in the last hour, was traders going, "Hey, the market's been up a lot recently. The last couple of Fed meetings have marked near-term tops. I'm booking my gains and I'm going to start bashing the market so that I can get stocks cheap again," which is what we saw. One thing to keep in mind, however, we've got quarter end a few days away. This is a rally that has surprised many, many traders, many funds, and they are underexposed and behind the market return right now, and they don't have a whole lot of time left to make that distance up. This is the best September we've had in the market in the last 50 plus years. We've got a lot of people who've jumped out of stocks, over the last day or so and started going short again, supposedly, if we're to believe that. And, we could see a little retrace. Looking at the 15-minute chart, it's been a slow move higher, which is, the best possible kind of rally we could have. These big 200-point rallies suck. The slow and steady move that we've been in over the last 3 weeks, perfect, especially for small cap stocks. Looking at the Dow daily chart, if you look at the daily chart here, the candle we saw today, not exactly the most bullish thing. We could see a retrace back to the downtrend breakout line down to 10,600 and still be fine. But be prepared if we see any redness in the market. You're going to see a gazillion bears pop their heads out of their holes and go, "See, I told you this market was going down." Even though we're up 900 points since our last "see, I told you so" stuff. We're about to get a golden cross on the Dow daily chart. We're probably looking at that happening maybe in a week, probably 2 weeks plus. So even if we do see some downside move, I don't think it's going to be that severe. We're going to have a lot of funds coming in trying to paint their portfolios. SMH, kind of quiet over the last couple of days. It's been holding that 50-day moving average. Again, we could see the SMH pull back to 26 and be fine, and that's where we'd be looking to see some strength come into it. Jump into stock plays here. HILL has continued its move higher. We got a peep above the 200-day moving average today, and then we had some weak need traders right at the close, which has been typical in a lot of these stocks over the last couple of days. Breakthrough at $1.50, and we'll be looking at that $1.71 this week. QTM, ISLN, all running higher. IBM just took out another storage stock. They bought NZ for $1.7 billion. This is a storage stock with less revenues than Hill. So chart RSI has been bouncing off the 50 level. MACD has held positive and is starting to build. ADX is strong, and stochastics were back up above the 50 level. So things looking really, really good on our play HILL here in the near term. TRID, this is one of an old favorites of ours. Stock had a nice little pop over the last couple of weeks, has given it up despite the rally in the market over the last couple of days, and should find pretty good support here at the 160 level. RSI and stochastics, we'd be looking for this to bounce off that 50 level tomorrow back to the 175-ish area. SCON, we had a nice little spike on this one yesterday. Volume was 8 or 9 times our 3-month average, and then today we still had some pretty decent volume on it today. Retraced all the way back to the 8-day moving average, but this is a chart that is definitely set up for a nice little move near term. And you recall a lot of our other big runners did this sort of thing. Nice breakout, eased off, and then continued its run. So once we get over this 170 area, we're looking for a move up there to 187, 190. HLCS, one of our biotech plays from yesterday, sort of eased off with a lot of stocks today, down on low volume, but still very nice support at 47 cents. We are about to get a positive MACD cross, so that will confirm the breakout. Remember the last time we jumped into HLCS, it did the same thing. It spiked up, then it retraced, it sort of treaded water, and then it went kaboom. So we're looking for a same sort of move here on the positive MACD cross that we should see probably tomorrow. KAD, this is a trade that did not work out. Had all the makings for a nice little pop, and then late in the day today, broke through that 40-cent support and fell down as low as 37.5 cents. So if you did not stop out of this one, I would look, I wouldn't rush for the exit just yet. I would look for a bounce back to the 40-cent area to look and try and get out of this one. They're not all going to work, which is why we're trying a bunch of plays right now. This one looked like it was going to go, but the seller sort of overwhelmed it here late in the day. URG, uranium play, trading alert 87 cents, got as high as 91 cents, look very, very good today. We are about to get a golden cross on this one. That is when the 50-day moving average crosses up through the 80 or 200-day moving average. Very, very bullish. Its peers have been on fire lately. A break through 92 cents lights this one up, and we will see a pretty quick move to the 1+ area on this one. Note the very heavy volume on this. Over the last couple of days, all the indicators are rock solid. Unbalanced volume has just gone vertical here. Looks very, very good with stops at 84 cents. Now, we had a couple of our recent plays going nice little moves today. We had CNXT breakout, hit our first and second targets today. As I mentioned in the alert, make sure you booked at least half plus gains on this play. If you're looking for a secondary target on this one, a break of 160, and we could see a move to the 50-day moving average up there at $1.80. BGP, which we've been pretty patient on here, also broke out today, hit our target of 128 on the nose. If you waited for the breakout at $1.20, you still got a nice 8-cent gain on this one, so very nice move on this. If it dipped back to the 20-day exponential at 113, I would possibly look to pick some more up. PARD, which is another one we've been patient over the last couple of days. Yesterday, big spike out, hit our first target, 55 cents. Little retrace on this one today, but not to be unexpected. And, I keep hammering this into you guys. Whenever we get spikes like this on plays like PARD, BGP, CNXT, sometimes I send out the alerts to book gains, but it should be automatic. When you get a spike, especially when it hits first or second target, make sure you're taking some off the table. You will not go poor taking partial profits on plays. RGN, same thing. Nice spike on this one yesterday, and then into the close we got some funny stuff. We saw it again today on a couple of stocks, but this is normal. I mean, we've had a nice little run up, retrace. This is a gem of a biotech in my opinion. And on the next move higher, we will definitely see this one make a move to its 200-day moving average up there at the 46-cent area. So going into tomorrow, love the setup on HILL. And then, of course, this little uranium play looks very, very nice. Volume over the last few days says this one is ready to rock and roll. And as we're looking at trading in after hours, we had Adobe come out, one of these bloated stocks. Guidance sort of disappointed. They reduced their guidance by $50 million, so their market cap is down $3 billion in after hours. Just crazy, crazy market times. But as I mentioned, retrace in the market, if one comes, I still think the funds are going to come in and be buying. And we really only get concerned if we break that 10,600 level, and we still have a lot of support below that. I mean, look at these volume bars over the last month. There's a lot of funds out there clamoring to get into this market, and I don't think our retrace is going to be that big if there is one. So we're always going to dance close to the doors and book our partial gains, but don't be ready to go all short this market just yet. That's it for the video. I will see you guys in the chat room tomorrow. Oh, one last note. While we're talking about possible tops in the market, take a look over your portfolio. If there's any plays that you've been sitting on for over 3-4 weeks that have yet to run, seriously consider reducing those plays, at least selling half or getting out all. We want to be nimble here. If a play hasn't run in the last 3 weeks during this market rally, maybe time to revisit it. Book the loss. You can always rebuy it again if it turns around and look better. That's it for the video. See you guys in the morning. Goodbye.